Hi and good morning. Welcome to today's walk and talk. Let me show you the sunrise. In today's walk and talk, I want to talk about, in more general, about the development of the crypto industry. So we will discuss the future of Bitcoin, so to say, but also the future of other regulations. And we will split it up into Europe, the US, and I don't have that much knowledge about the Asian cultures or the Asian room. So we will concentrate on Europe and on the US. So let's first of all talk about the US. Yes, since Trump is basically in office, we see loads and loads of positive things coming into play in the crypto industry. First of all, the biggest change, I think, was when they really now are establishing the stablecoins, but we will talk about that in very detail. So let's start from the beginning. First of all, they freed Russ Albrecht, as you may know. So he was released from prison. This is the first step. The first promise basically Trump gave the crypto industry at the latest BTC conference, or at the conference, I don't know how long is it now ago, almost 7 or 8 months, something like that. So this was basically fulfilled. Then one of the biggest steps for the industry, I would say, is also the development or the release by the SEC of the ETFs. So first of all, we had the Bitcoin ETFs released. Secondly, we had actually the Ethereum ETF released. And if you have watched my latest videos, you will know that now it's quite clear that Ethereum staking will be permitted to the ETFs, and loads of companies are already inside of the filings and they will get approved very soon. Also, Solana ETFs are getting approved, and probably Solana will also already come with staking. So that's going to be interesting. So this was one development. So the ETFs basically. And the next development, the next big development, I would say is really that they exchanged the SEC chairman. So we have now a very positive, very crypto pro chairman. But please remember, if you are old enough to remember, it's not that long ago, but when was the last chairman actually established? I think it was around 4 years ago. And we have been very positive. So we said, this new guy from MIT is coming in. So Gary Gensler, I'm talking about, he's coming in, and he was giving lectures on blockchain on MIT that have been quite positive. So I've watched some of these lectures, and the whole crypto industry was going, whoa, this will be great for crypto. And just see what happened basically. It tried to basically destroy the industry together with the treasury. So I hope this time it will go better and it's really positive for the industry. One major step actually happened, I would say, yesterday. So yesterday, if you watched my other video, we'll link it on top here. Yesterday, the bill, the stablecoin bill, the Genius Act, actually passed the Senate. And what does that mean? Why is that so big for the crypto industry? Well, we have to be a little careful about that. What the Genius Act is actually also doing is that the Genius Act is shifting powers from actually small players, small DeFi constructs or small startups. It's shifting the power again away from the people, so to say. So actually this is the opposite of the crypto idea. But to be honest, a stablecoin is not really much related to the original idea of Bitcoin, at least, right? So they're shifting away the power. Why are they shifting away the power, or how does it work? So there's a lot of regulations. What point should we start first? So let's start with the point, basically, who can issue stablecoins? So before you remember, there was Terra Luna, that of course was a big scam. They issued a stablecoin, and it was an algorithmic backed stablecoin, but then something went wrong and a lot of people lost their money. Also, there was, or there is still, Tether. US Tether is one of the biggest, or is the biggest stablecoin at the moment. By the way, in Europe, if you're a European citizen, you're not allowed actually to hold USDT anymore. Then there's USDC, which is owned by Circle. Circle is really into this banking cabal, you could say. They have the USDC, but they also have a USDE, so a digital euro. This can be interesting for you when you see now the euro actually being quite stable against the dollar, and you want to off-ramp or you want to take out your money. I believe that at the moment, it's probably the better play to go into the digital euro to not have this exchange risk. For the longer term, of course, you need to be careful, because if you go into stablecoins, you also have the same inflation as you would have with fiat money. So you need to be prepared. If you hold a certain amount of stablecoins for 1 year, you will have the actual 14%, about 14% inflation. It's not the inflation they're telling you on TV. It's really a different number. So the number in your bank account stays the same, but the buying power is greatly diminished. So you need to be careful about that fact. So the banks can issue stablecoins. Federal entities can issue stablecoins. And who else? I forgot the third one, but basically it is now on a state level. So you need basically approval. And the thing is, they moved it up to federal. And this is a little bit of a concern for me. It's the same as you have it now with the border patrol and all this stuff. What that means is, for example, if the governor from Florida wants to decide something for his state, he can do this, but he's not able to decide issues that are considered federal level. And this would be airports, for example, or also ports. And this is also now true for stablecoins. That means that a state in the US cannot overrule this stablecoin legislation, meaning that basically the Federal Reserve or the federal entities are controlling all the stablecoin fields. And the states itself don't have much saying power. They can issue stablecoins, to my knowledge, but it needs to really fit very closely to their Stablecoin Act that they brought out. One more very important point about stablecoins is that now they need one-on-one backing. Well, this seems actually interesting, because this, if you just listen to it, if you just read it, you may think it's a one-and-one backing, means that they have, it's a full reserve bank basically. A full reserve bank would mean that everything the bank lends out, they need to have. At the moment, it's more at the point where you give them $100, they lend out 95 or something like that. And then, of course, it's a risk for the bank. If they do it multiple millions of times, then just imagine how much collateral or how much backing they have, almost zero, right? And now they even make it easier for banks. So I guess they don't have to hold anything anymore, or 1%, but this is just a joke. Of course, they say it's FDIC insured or something like that, but this is not really playing out. If you look at countries, like if you look back what happened in Cyprus and so on, you can clearly see that this is not the case. And what is interesting, I just saw that about Cyprus, is that actually Cyprus got a massive problem with the banking system because of their Greek bonds. The bonds fell very much, and this got the banks to struggle. And why does that fit to our stablecoin, our development, crypto development talk? Because stablecoins are now required to be fully backed. And they can have cash, they can have bonds, or they can have other government assets. I'm not sure, some treasury assets or what it was. Like I said, this sounds quite good. And if you look at USDT, USDT is actually backed 100%. USDT has got full backing and they're even over collateralized. That means they have a lot of bonds. So they are one, I think it's the sixth biggest bond buyer in the world, meaning they are overtaking now Germany in amount of investment in US bonds. Also, they have gold, they have Bitcoin, and they quietly became now the biggest Bitcoin miner on the planet, as I know. They just announced that at the last conference. Nobody really knew about that, but this is also very interesting to know. So it has to be backed 100%. But what is the main issue with that? The main issue, it's backed by nothing. It's backed by no value, basically. Because what value do these US government bonds actually really have? They can default. You know that the US has got massive problems paying back their debt, right? So for me, that's a joke. Also, if you back it by cash, you just print it. It's the same. It's the same. It's a Ponzi scheme, basically. So your stablecoin is 100% backed, but by what? Like, you know what I mean? So this is also a development we're seeing. Also, we have really hard restrictions. You cannot come in as foreigner. And strangely, what is strange for me, at least, that I wrote in the stablecoin bill that actually, if a foreign actor comes in the US and tries basically to establish a stablecoin, they will heavily go after him. And strangely, I saw that the Treasury is in charge of that. So really, what is happening now with the stablecoins, because the US is so much in debt, they are trying now to pump out the stablecoins around the world. And this is actually a really good strategy and may probably be the last strategy they have to avoid a bankruptcy. How does it work? So they are already the majority issuer of stablecoins. So USDT, there's almost no euro, no digital euro in use. There is some other things in use. So basically you have these drawn stablecoins that are used very heavily. You have in use other assets that are acting like a stablecoin, but mainly it is the stable coins with the USD backing, so with the dollar backing. I'm not sure about the market cap in the moment, but it's a pretty high market cap. If you look at all the coin tracking softwares, you will see that all the stable coins are quite high. What can the US do with that? Basically, they can, again, because they are the US reserve currency, what they can do is they can continue to distribute their digital dollar. They did this now before with oil, actually. Everybody needed to pay in oil. This deal is now not really active anymore. We have lots of countries trading in their own currencies. We have countries starting to trade in Bitcoin. We have countries that start to trade in their own digital currency. We have the BRICS nations doing everything different. So with oil, the US is actually not really able anymore to pump the dollar into the market and export their inflation. So they are just exporting basically US dollars and the world sends them basically money. This is very hard to continue now as they saw that nobody wants to buy their bonds anymore. Now this is trick 17, where they just roll out the stablecoins. And yes, for lots of countries like African countries or poorer countries, it is a very good deal to hold a US dollar. Even the US dollar is inflating at the rate about 14%. It's even much better than you have your own local currency deflating like 100% a year or being worthless very soon. So this is a good trend. So, and it's very clever. So think about the whole chain. Everybody around the world is now able to hold these stable coins. They will make the regulations in this way. So in Europe, like I said, you're not able to hold USDT, but probably this is gonna change because it's gonna benefit the US. It will depend how the relations play out, or what they have in their plan, however that works, right? So this is a very clever idea to have everybody using the stablecoin. As soon the stablecoin issuer issues actually the stablecoin, he will have to buy these assets. He will have to have US dollars in cash or some treasuries or bonds. This is important to understand. This will stabilize, or this will actually make sure the US is not collapsing in the next years. It's a very clever strategy. So the US overall, as you see, as you know, is developing very fast and very positive for crypto. I mean, I'm not so sure if it's long-term positive. The strange thing is, if you used to go to crypto events, or especially Bitcoin events. So when I was many, many years ago at the first Bitcoin Miami conferences, there was no politician, there was no big CEO of some whatever company. Now, if you go to a conference like that, you just mainly, who are the main speakers? The main speakers are basically salesmen and politicians, I would say. It's CEOs of big companies that want to actually sell their product. And if you are looking what the narrative is on these conferences, now it's slowly shifting to lending. I also made a video about that. Check it out, where the industry is basically going in the narrative change. The new narrative, I have the feeling, is that they want that you are lending against your Bitcoin. Yes, and this is actually a very good idea, but you need to understand how it works. You need to understand if you put your collateral there. So for everybody who does not know how it actually works, let me explain it to you. What you can do is you can take a certain amount of Bitcoin, you can deposit it with a lending platform. This could be a Nexo platform, this could be Nomi, which is a new platform, and you put your collateral there. You need to be very careful about if you can trust them. You never know, right? But so it should be an amount that is not significant, really significant for you. You need to make the decision. Do you want to sell the asset and buy whatever you want? Let's say you want to buy a car. You have saved up over the last 5 years in Bitcoin. Because Bitcoin is appreciating 60% per year, you are now able to buy a car with your, let's say, $10,000 or $5,000 investment you made 5 years ago. And then you have to make the decision. So do you want to sell all your Bitcoin, or do you want to give this to this lending platform and it will be locked in? What that means is it's actually at this point not really yours anymore, because you just get it back if you pay back your loan. How it usually works is that these platforms give you 50 or 60% loan to value ratio. This means that they will give you, let's say you're depositing, if you talk about a car, I don't know if you want to buy a Lamborghini, let's say you want to buy a Lamborghini, probably you get one for 50,000. I don't know, maybe it's not a new one. So you need $50,000. Let's say you have 100,000, you've managed to get 100,000. So you have to make the decision. Are you selling half of your Bitcoin or 50,000, you still have the rest basically that you can store. And if this continues, if the trend continues, basically, you have already the next year, almost, or the year after the next year, you have the money back if Bitcoin appreciates 60% again. So you can sell it and buy your car. Your only problem, or the only thing, is then you need to find a way to cash it out. Depending in what country you are, it's easy or not. So I can tell you 3 countries where it's quite easy. You could go to Portugal to cash out. This probably doesn't work for you if you're American. If you're not American, in Portugal, they have a law that basically is called long-term capital gains tax, which means if you hold your crypto for over a year, then you can sell it in Portugal tax-free. Probably you have to give them a statement or show them how it actually worked, or how did you accumulate your crypto, what is the journey of your crypto. And then you can even go there on the last day of this 364 days and cash it out then after a year. The requirement is that you didn't actually touch it or trade it in between. And in Germany, it's the same. And also in Dubai, it's even easier. You can fly to Dubai and we'll find a way probably to cash it out. So you can buy your Lamborghini with cash, basically. The other thing is you can lend against your assets. So you put it on this lending platform. You have 100,000 in Bitcoin or whatever asset you put there. It really depends. So Bitcoin usually has the highest loan to value ratio. That means if you give them Bitcoin, they will give you most of the money. So for certain assets, you can just borrow 30%. That means if you give them 100,000, they will just give you 30,000 or 40 or something like that. So you're borrowing this money, basically. You have to give them double of it. And then the money comes to your bank account. It can be with stablecoins. You could actually use it to go into a trade or buy some new assets with a stablecoin. And you could also get it delivered or get it sent to your bank account. This is quite an easy process. Also, for tax reasons, it's a loan basically, so it's not, in most of the countries, you don't have to pay tax. Then you can buy your car as well. And you still also have like all the Bitcoin. But what can happen is you can get executed. It's like a leverage trade. So if the price goes really very much down, then there will be a lever where you be executed. So be careful about that. Yeah. So that was quite a sidestep from our topic. But let's now get back to the main topic about the development of crypto. I was just getting into the topic because that the people that are speaking on this conference is basically almost all of them are marketing not really the real use case of crypto or Bitcoin. You take Michael Saylor, for example. He wants you to invest in strategy. This is basically getting shares in a company. The company business model doesn't really work anymore, so they decided to become a Bitcoin strategy company. They are very successful, but the question is, what will happen if Bitcoin really goes heavily down? And I'm not talking about Michael Saylor, and I'm not talking about the liquidation price, because the liquidation price is very low. And I don't think Michael Saylor will sell it. But what about the shareholders? So the shareholders could very much panic and get out. And then he probably would have to sell some Bitcoin. And then we see the ripple effects. Strategy, I think, could be okay. But all the new companies that are coming in now and getting reserves, we see lots of companies coming in. They're not having a real business model. Like, I think MetaPlanet is the company out of Japan called. They used to have one hotel. They bought Bitcoin. They went public, or they have been public already, and the stock price really skyrocketed. So the main thing I want to tell you about that is that you're basically then buying stocks or you're buying an ETF. They're advertising all these products where you're not really holding your own key. You're not really holding your own crypto. Also in this video, I want to tell you again, if you are a stock market investor, please do me a favor and look into the Great Taking. You will find it on YouTube. I will also do a video on the Great Taking. The Great Taking, in very short, shows you or tells you the actual legal situation in Europe and also in the US, in every state, that your stock, or what you think is your stock portfolio, it's not yours. You're just a beneficial owner. It's not really yours. So if your broker goes bust or your bank, even if this was actually a scam or not legal, your stock is gone. So be careful about that. That plays into the game when you buy basically an ETF. When you have these shares in Strategy and all the other companies, it's also the same if you buy gold certificates or whatever. You don't know if they're there, right? There's lots of cases where people have been charged even for storing their gold, but the gold was not even there, right? This is nothing new. So the basic idea is with Bitcoin or with a lot of these crypto assets that you're holding it yourself. But if you ask me, Bitcoin is the only asset you don't have counterparty risk. So now some people will say, yeah, but what about Ethereum? If you're old enough, you may remember that Ethereum once rolled back their chain, right? So what about Ethereum? So in every other project, you have controlling entities. We see that lots of times where suddenly the community, the